Happy Friday, everybody. Welcome to our Trading a Smaller Account. I'm Connie Hill. I'm sitting in for Barb Armstrong today. She is down in Dallas for our big event down there tomorrow. And so she's gone, so I'm happy to fill in for her today. I would like to be laser focused today. I want to focus in on one strategy, and I've designed every strategy so that if you could only risk $200 in your account, you could do the trade. Okay, so I've really condensed the size of our scope of what we're going to look at today, but I think we can get a lot done. I am joined in the chat by Brent Moore, as I'm happy Brent is here. He will maybe cast some questions I can't quite get to, but I've got my chat up. I'm going to keep my eye on it. So when you have questions, just let us know. We're happy to help. Now, I hope you're following us on X. I'm Connie Hill CS. Brent is Brent Moore CS. Post educational content out there, things that we notice in the market that we think you might find interesting. We share that information with you. So make sure to follow us. It's free. Let's go through our disclosures and get down to the fun. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for general informational and educational purposes. Don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. Fantastic trading tool if you're trying to learn different strategies. Man, do it in your Paper Money account. As we look at examples, keep in mind that they're not recommendations of any sort. Past performance is no guarantee of future results. All right. In this class, we have new people joining us all the time, although I'm so happy to see so many of the regulars and the friendlies. Welcome to each and every one of you. In this class, we have a $20,000 account, and that's what Barb started with at the beginning of the year. And the idea is to grow this account throughout the year, just like you might in your account. Now, your account that's small might be totally different for every single one of you. Some of you may just be dedicating a certain portion of your portfolio to maybe some active trading where you're trying to build it up. And so no more than $5,000 will be put into any single position. We'll only risk $400 to $500 per trade. And like I have for you today, every single one of the trades we're doing today, if you could only risk $200 in your account, you could do this trade. Okay. Of course, they're for practice. We'll look at short-term and intermediate-term type trades. So not in there for a long period of time. We look at both bullish and bearish. Right now, the market's been putting in all-time highs. So we're really focusing on those bullish strategies. When we are bearish, we'll look at some long put verticals, short call verticals. Sometimes in a neutral type market, we'll look at, or range bound, we'll look at some neutral strategies like iron condors and calendars. All right. Hold on tight. We've got a lot of ground to cover. Let's hop on over to our Thinkorswim. You can see, yep, yesterday the index made another, S&P 500 made another all-time high, 66.56. And so as the market's just churning higher, really we have been focusing on more bullish trades. Now, the one strategy that we're going to focus on today is a long call vertical. And we're going to just do rinse and repeat, rinse and repeat, rinse and repeat. I have a goal to get, I have prepared for 7 trades. I don't think we can get to all 7 of those trades, but I'm going to do my best. We'll go slower on the first one, and then the ones after that will go a little bit faster. First chart up is Newmont Corp. It's a mining company. In some of the classes I teach, we've been able to have some good example trades using this stock. You can see I've got some different entry and exit points that we've used here in the past. What's it doing today? Well, pulled back to this blue line, which is a 10-period moving average. Boy, it's bouncing nicely off of that. Some might even say it looks like a short-term breakout. So by either way that we might look at it, we've got what some people would use as a bullish entry. For the oscillator I have up here is the RSI, which really gives us an idea of the momentum of the stock. And when the line's headed up, it's obviously, I shouldn't say obviously, but more bullish. When it's above 70, that's when it goes the overbought region. Some people think, well, maybe that's bad, but it's really not bad. It just means buyers are in control. And you can see through this period of time that RSI was above 70. And so, yeah, buyers are in control right now. It's early in the day. Look how much volume the stock has already. So we're going to proceed to say, all right, we have a setup. We're going to use it. Let's go look at the option chain. Somebody likes the fundamentals of Newmont as well. Chris likes those fundamentals. All right. Every single trade, we're going to focus on the October 17th. Why? Well, they're kind of in that prime window, working with 20 to 40 days worth of time, which a lot of traders like when they're using some shorter term strategies. And these are liquid. This is my open interest column. You can see these thousands of contracts. Oh, that makes you happy. That gives you a fuzzy, warm feeling that you're not working with wide spreads and lots of activity to get in and out easily. Now on this one, I had pegged out. Let's see if this is still going to work here. I was looking at the 80, 82.50. Right now, the stock's right between the two of them, kind of smack dab in the middle. We say buy vertical. Remember, the object with these trades is to get beyond the short strike price. So we would want Newmont to get beyond 82.50. That's where it's going to be able to achieve its maximum gain. And right now, it's already at 81.50. So it just needs to travel $1 for us, and we would be happy campers. What I was going to say is, how far is $1 away? About there, kind of where my mouse is, so maybe a little higher, about there. So could it do that in 28 days? We'll soon find out if it really will or not. Okay, this trade, we would be risking $1.31 per contract. Okay, if you're in a $200 account, could you do that? Yeah, you absolutely could do that. I'm going to lock it in here at 125. I know it's been floating around there, but we would have a 250 difference on the strike prices minus our max loss of 125. That means our max theoretical gain is 125. All right. In our account, because we can risk up to $500 a trade in our account, our example trade, we're going to do 3 contracts here. And we're going to put in an order to buy it back when we get a chunk of our max gain. Now, it's really difficult to get every little penny out of a spread. Even though we know what the theoretical max gain can be, it's really hard to get it there. And because of this, we'll say, all right, if we can get a chunk of it, then let's take a chunk and be on our way. You know, we're risking 125 to make 125. That's 100% return. So what if we get 80, if we get 70, would we be happy campers? The answer is going to be, for us, yes, we will be happy campers. Let's change this to a first trigger sequential. We'll create an opposite order here. And for our purposes here today, I know I've asked you guys in some other classes, what do you like? What percentage gain are you happy with? Some of you have said 50, some have said 60 or 75, right? It could be different on every trade, or it could be something you just methodically stick with. So on our $1.25 here, if we could get 70% of it on this trade, we're going to be happy. So let's multiply that by 0.7. So 87 cents would be happy to take that. All right. Let's add that to our $1.25. That says let's put in an exit at $2.12. All right, we're going to make it good till canceled. Question always comes up, well, are there any other reasons we would get out? The answer is absolutely, right? We could have multiple exits. We could have, what if it's bouncing here off of the 10, maybe even have it a little bit of a breakdown or breakout. You know, what if it kind of turned face on us? What if whatever happened in the news, something with the company, maybe it would give it cause to have a technical breakdown? Something we might do here is would say, well, where has been a horizontal level support? Yeah, it's bouncing off the 10 right now, but maybe even a little bit lower than that might be a horizontal support area. and so maybe we'd give it some wiggle room down here below that support area. But if it really violates it and breaks it and we get a lower low, then it might be time to get out of the trade. Let's minimize our risk here. Let's get out with what we can. All right, back to that trade tab. Now I'm just going to see if it's changed much here. 128. I'm going to see if we can still get filled at 125. And did that change? No, that did not change. All right, let's hit confirm and send. I'm going to send it to a bucket called trading a smaller account that when I was helping Barb out, we created that when she was out with her surgery. Okay. So we're going to send it to that bucket. All right. Let's do one more. I told you we're going to be laser focused here today. And next one up is going to be a service type company. You might be familiar with it. Uber. Any of you ever taken an Uber? Man, they really helped me out in my vacation in Las Vegas a couple weekends ago. Man, they were awesome. What have we got going on here? Well, it looks like maybe it's been a little bit range bound, but it's got a nice bounce. It came down here to the 30. That's my red line. Kind of bounced off it yesterday. It was hard to tell if it really was a meaningful bounce. Today, it's having some nice follow through. Some of you might look at that as a hold or a T hold, a trade above the high of the low day, that it's making that movement. We're trying to get in early. Our RSI is headed up, letting us know the momentum is there. Look at the volume here already today, guys. It's almost up to average. Okay, so, all right, let's proceed. We've got our setup. We know we're bullish, and we know we're just looking for a long call vertical. We probably don't need that many contracts open for what we're looking at here today. Let's go with 20 for the moment. Stock is at 98. And so many times we'll just start it right at the money option on these. I like that 5 cents between the bid and the ask price. Ooh, isn't that delicious? Oh, that is so delicious. 5 cents here on the 100 strike. So we're going to do another buy vertical. And this one, all right. $2.50 wide spread. That makes it easier for you to manage that risk on a smaller account. Like I said, if you could only risk $200 in your account, you could do this trade. Let's lock it up at $1.23. We need the stock to go above 100. It's got 28 days to do it. Where is 100? Well, 100 is right there. So it's going to have to move some. Right? It can't just float along sideways, although if it did for a couple of days would be fine, right? But really, we need it to accelerate, maybe get a little bit beyond that previous peak at 99.70. Yeah, I should have plenty of time to do that. All right, so again, we're going to put in a percentage gain. If we get a chunk of it, we're going to buy it back. We're going to do 3 contracts here because we know that we can. With our position sizing, that won't take us over $500. So we'll do that. We'll put again a first trigger sequential. John says, is this trade number 2 or 3? Uber is trade number 2. Yeah, Chris is saying, have I only counted 2? So let's go ahead. First trigger sequential, create our opposite order. And we're going to go with a different percent on this one. First one was 75%. No, the first one was 70. Okay, 70%. What if we got 75? Would you be happy at 75? Some of you would, some of you might not be. Okay, but let's go with 75. So clear it out here. If we're risking 125 on a $2.50 wide spread, we have at risk 127. Or we have to gain 127. Okay, so 1.27. Oh, comma or the period didn't pop in there. 1.27. Let's times that. I said, let's get 75%. So multiply by 0.75 on this one. Would be happy at 95 cents of our theoretical 127. Okay, so let's add our $1.23 to that. That says get out at 218. So we're going to do it. We're going to plug it in, make it good till canceled. And the same rules apply. If we see a technical breakdown of Uber, yeah, we may have to exit early. By putting in an order here, we're hoping that the system, will go ahead and catch it for us without us having to stare at it every day, right? Trying to see if we can catch some profits out of it. It's like, plug it in, let automation work for us. Hit confirm and send, creating a smaller account bucket. All right, trade 2 down. How many of you are actively trading, say this strategy, long call verticals? Do we have any of you in here that really do that? We've got a couple of questions here, and I'm noticing a survey out here. Let me tell you about the survey first, then Alex, I will answer your question here about how did I find NEM. Yeah. Once in a while, we'll put out a survey to you. We like your feedback. We like to know what your thoughts are. We want to know how to make these classes better for you. Okay. 2 questions. You plop in the radio button, ... takes you 2 seconds, you're done. If you want to answer, there's a couple of feedback questions if you would like to answer them. I also encourage you to use it as a space to communicate with me. If you're like, man, I'm struggling with this, or if there's some information you want me to pass on to Barb, and say, hey, Barb, could you cover this in an upcoming class? Absolutely use that space, okay? And I'll make sure that Barb gets that information. Of course, I'll go through the information. I want to make my presentations just as helpful to you as I possibly can. So that's why we love to have your feedback. Brenda will post that again throughout our session here. So if you need to take off, just click on the link, do the survey, out you go. All right. The question, where did I find this particular stock? I'll tell you where I found it. I looked at a couple of different watch lists today. I don't think it was on this watch list, but let me organize this one alphabetically and go down to the ends, Newmont. Actually, it was on this particular scan. Okay. This is what I call my early morning movers scan. It's a scan I put in. I run almost every day looking for bullish opportunities. I have a bearish version when we're in bearish conditions. And the idea with it is that we have stocks that are already trending up. They're trending up in a 1 month period, a 3-month period. They have a lot of volume activity on them. Actually, that's not true. They have at least 250,000. I think on this one, I may have adjusted it for 500,000, trying to get a little bit more liquid stocks in it. But basically, and they're making a move today. If they have moved 1.5%, I'll take it. Today, I changed it to 2.5% because there were so many stocks that came on in that scan. Okay, so I have, in fact, I'll show you where this is. This fits in nicely here. Okay. Where can you learn how to run that scan for yourself? I am going to show you. Let's hop over here to our Trader Talks. I hope you're a subscriber. It makes it so much easier to find our content. Click on that little blue icon down in the bottom right-hand corner. It looks like YouTube in blue. It says subscribe on it. And so what I've done here, we have different playlists for our classes, but I'll show you where you can see a little bit of information. We've got some what we call bite-sized content, and these are little videos. Okay? In fact, if you have a suggestion for me of something you'd like to see in one of these bite-sized content videos, let me know because I'm going to do one next week. And where did it go? I thought it was in this watch list. It might be in a different one having to do with Thinkorswim. So let me find it for you. Oh, that is so embarrassing if I can't find it for you. I did just a little mini one on it, but I think that one we actually put out with some of the Thinkorswim videos. Although I thought we had moved it to this one. This is what I'm going to do. I'm going to put in a search. Instant, this is what I called an instant bullish watch list. Have to spell it right, though. Instant bullish watch list. All right, here you go. Instant bullish watch list. You can pull up that video. And I teach you that scan so you can save it yourself and run it yourself. Okay? Fantastic. Let's move on. Now, if Hovis says that, with theta not on our side on the Uber trade, could we have included the exit on the downside? You absolutely can. And sometimes we'll focus on that. Many times on verticals, traders might not want to manually put in an exit. They might, sometimes too, okay? And you could decide that. You could say, yeah, if the stock breaks down, say on Uber, our low point here a couple days ago was 92.12. So maybe you go, if it goes lower than 92.12, then it is not continuing in that pattern. It's going to be giving us a lower low. So yeah, you could configure it that way as well. You could do an OCO order, right? Put target on one side for getting out with profit, take the other as kind of a stop loss or a conditional order to get you out if the trade just does not go our way. Chris says, it seems like short put verticals are a bit more conservative for some trades, and that is preferable. It absolutely can be preferable. My purpose today of saying laser focused on long call verticals is so you could just get really comfortable with this repeatable process. And look, I threw out several example trades we could have used for short put verticals. Or I also threw out some that we would have risked more. I mean, maybe we could have risked $500, but I really wanted to be laser focused and say, all right, if you've only got $200 you can risk on a trade, here's an example trade that you can do. Okay, so that's kind of why we have that. Yeah, Alex says last watch list I created with you was for short verticals on 9/11. Yeah, we did that, didn't we? Last week we created, and that was actually my other watch list I used, was one that we had created in our short verticals class that you could use for long verticals, short verticals, any kind of option trade that you're working on. All right, let's look at our next example. Okay, Andy says, is there a probability of profit that you would look for with long call verticals? Yeah, and it can vary per person and per trade. Our first trade, we said, hey, if we get 70%, we'll be happy campers, get out. The next trade, we said, if we get 75%, we'd get out. But, say you got 50% in the first week, you might be like thrilled. You're like, yeah, lock in the gain, move on to a new trade. You get to decide that, okay, where that comfort zone is for you. One of the things with long verticals, the way that many times they're constructed, although it doesn't have to be constructed this way, they tend to be a little bit more aggressive in that we need the stock to move. And when we do that, that actually brings us in a higher profit potential than a short vertical. Many times we're happy with 30% return, say on a short vertical, say a short put vertical if it were bullish. And we can make a long vertical that way, but generally construct it so that we're looking for a little bit more movement out of the stock than just staying stationary. Okay. Thea wants me to show you the scan. Well, let's go through our next example. And actually, I just showed you where the video is, and that's all I teach you in that video. It's a real short one. And that's the only thing I teach is how to build that scan. And I talk to you too. I say, sometimes I'll change this parameter to this, and sometimes I'll change this parameter to this, giving you a little bit more context of that scan. Oh, Andy says, the percentage of your trade that would be profitable, I think long call verticals have a lower percent profit than short put verticals. I guess it depends on who you are. Short put verticals, many times in the classes, my class that I teach on Thursdays, we really are targeting a 30 to maybe a 40-something%. We're not looking for 50, 60, 70% on short put verticals. because we're really looking for the higher probability. We're looking for the possibility that stock can kind of wander a little bit, maybe stay even, maybe it pulls back even a little bit, doesn't go up, even though we're working with a bullish stock. So yeah, it just pointed. Yeah. All right, next example. I told you I had 7. If we have time to get through all 7, we can be good. We can feel good about that. All right, BKSY, Black Sky Technology. All right, what kind of trend do we have here? It's bullish. What kind of signal do we have here? Well, it kind of looks like maybe it's breaking out above. We can see a couple of different things here. One, maybe it's short-term resistance that is breaking out of. 2, maybe somebody saw, like, say, a flagpole and a sideways flag pattern for 3 days, just consolidating sideways, and today pop. Okay, so RSI is headed up. It's bullish. It's already at its average volume today. So let's take a look with this one. It's only a $21 stock. If somebody wanted to work with stock positions in their smaller portfolio, you know, a $21 stock makes it easy to work with. It's already traded 1.5 million of volume today. I did have this open here so we could kind of glance at beta if we wanted to. This is a 2.5 beta. We've talked about this in the class in the past. That means if an average stock on the S&P 500 moves $1, this stock has a tendency to move about $2.57. Okay, so much more volatile, which translates to higher volatility, translates to expectation for movement. And you can see 99% priced into these options here. So that's a lot of implied volatility in there, which means, man, let's incorporate a selling strategy of some sort. And as you know, today's focus is long verticals. All right. So we're going to go buy vertical again. Now this one has a what? Has a $2.50 wide spread. So again, really nice. Our risk on this trade would be 105. And it would be 105 to make what? Well, 250 minus 105 would be looking there at what? 155. No, more than that. Yeah, 155. Yeah, we'd be looking for that. So should we proceed? Yeah, we're going to proceed. If you had a $200 account, could you do this as an example trade? You could. You could do one contract, and if it dropped down to $1, you might go, oh, good, we can do 2 contracts. All right. It needs to get above 2250. Where's 2250? It's got to move. And I'm going to put my mouse about 2250. That's pretty close. Think it could move that much in 28 days? Well, if it's a high beta stock, moves quite a bit. Right now it's trending. We have the 10 moving average crossing above the 30 recently, so a shorter term moving average crossing above a little bit longer term moving average, although 30 is more intermediate. Yeah, it doesn't look like it's unfeasible. Okay, it looks like, yeah, it could be feasible. All right, we can risk how much in this class? $500. I'm gonna get rid of that watch list because sometimes I like to use the scratch pad here. And I'm going to actually do a little calculation on this one. What is our theoretical max gain percentage on this one? Okay, if we take 2.5 minus 105, and I must have hit something wrong. It's not 148. I must have hit a bad, must have fat fingered something. 105 from 2.5 is $1.45. So for every 105 we're risking, we have $1.45 to gain. So that is, I'm going to say, more aggressive, meaning we're looking for more than 100% return here. Okay, if we take, I'm going to lock that in at 105 here. If we take our max gain divided by our max loss, so our 145, come back here. 145 divided by our max theoretical loss, 105, 138% return. Okay, so I'm going to say it is more aggressive. We're looking for a higher return there. So maybe we could be satisfied with maybe not the whole chunk of it. Now, if you're only risking $200 per trade, you might not take that approach because you might go, oh, I want a little bit more. But certainly, do you think we could be satisfied with something less than 138%? I would hope so. Okay. Trading verticals, it's really hard to get that max theoretical gain out of it. And so that's why we say, let's look for a chunk and be happy and take it and lock it in and move on to a new trade. What if we got 100% return on this one? Would anybody be satisfied with that? For our class, I think we would be satisfied with that. Because we can risk up to $500, we're going to do 4 contracts on this one. Let's do a first trigger sequential. And then what is our next step? In opposite order. And then I said, would you be happy with a 100% gain? I don't know what your answer was because I'm the only one I can hear. But let's go ahead. Let's put it in for 100%. That means if we can get 210 out of it, fantastic. Let's move. Somebody wants to know why this stock is so volatile. We can go and look and see what they do. Remember, we never include commissions here, but here's our max theoretical loss, 420. We're keeping it between that $400 and $500. We're going to send it to our trading a smaller account bucket. And we got filled for a little bit cheaper there. Let's see if we go to the analyze and fundamentals. Let's see what these guys do. Black Sky Technology operates as a space-based intelligence agency in North America and the Middle East, Asia Pacific, and internationally. Provides geospatial intelligent imagery and related data. Okay, that's what they do. Is that kind of thing being used right now? Oh, yeah. Yeah, maybe it could be bigger demand for their product. Who knows? Okay, we're just going to trade what we see and move on. Let me see. I think there was another opposite order could be 80. I think CU was saying maybe like 80%. Okay. Very good. All right, I'm glad some of you are going down to Dallas. You're going to be there for tomorrow's event. That'll be perfect. We're going to spoil you, and we love it when we spoil you. Okay, that's trade number 3. Again, when would we consider getting out of this one? Let's talk about potential exits if it doesn't work out. On a flag pattern, and this one I would maybe categorize it that way, just kind of a flat flag flying in a stiff breeze and then breaking out. If the price settles back down into this area where the flag was, would consider the pattern broken. Would say, it is not following through with what it said it was going to do. And so for some traders, they might use that as a reason to completely get out. I would say especially if it was a swing trade. When you're trading that pattern, then that's a potential exit. Say it came down maybe just a little bit. Maybe you're not that worried and we're in a vertical. We've got time on our side. We know we can handle some time decay. Okay. But really, if it were to maybe exceed the bottom part of this flag, that might where somebody might be serious about getting out. All right. Your wife comes for the food. She's not too interested in trading. Well, that's good that she supports you in that cause, Chris. Man, that's awesome. That is totally awesome. And maybe a little trading will rub off on her and she'll be extra supportive of your efforts. All right, here is another stock that's in a kind of a flag pattern. Okay. The name of the company is Energy Fuels, and these guys are into, I'm going to say, what are they doing? engages in the exploration, recovery, cycling, exploration, operation, blah, 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 of uranium. Okay, so uranium used for nuclear fuel. Are these guys in demand right now? Oh, yeah. Yeah, they definitely are, aren't they? Going back here to the chart, you know, what I was seeing here, I was seeing that it was a nice, kind of a nice pop-up move, right? Nice little flagpole, flagging sideways for a couple of days. 2 to 5 days is ideal. We got 2 days out of it, and today it looks like it's breaking out. We can't be confirmed that it's breaking out until the close of the day, but right now that's what it looks like. So we're going to take it based on it trading outside of the flag consolidation area. Now, if somebody wanted to in a trade, this is a $14 stock. Some of you might consider buying the stock outright for your account. Some of you might consider maybe even doing a long call. You might go, maybe I'll treat this as a swing trade, right? Take the flagpole, duplicate it, come over here, see where your breakout is. Might have a target up here at about 1726 or so. Okay, you can totally approach it that way, but because I just wanted to be uniform, every single trade the very same today, we're going to do what? We're going to do, hope you said it, a long call vertical. All right, look at the open interest here. Does that just make you happy? I hope that makes you happy. It makes me happy to see open interest like that. Dollar wide spread. Could you do this in a smaller account? Oh, yeah. There's our vertical. 48 cents. And if you could only risk $200 in your account, you could do 4 contracts. Now, you could be more aggressive and spread it out, but that the stock might have to move, the stock would have to move more. If we change this 15 to say 16, we would be requiring the stock to move more, right? Obviously, $16 is more than 15. And so you could consider, these are just kind of some variations somebody might consider. We're going to go with the at the money. We're going to do the 15, 16 here. Okay, we're going to do the buy vertical with the expectation that the way that it's moving right now, a buck shouldn't be too much, but 16 would be about where my mouse is. Okay, it's just right under 15, and 16 would be up here. Could it do that in 28 days? We would hope so. If you wanted to be more conservative, though, you could consider doing, you could do the 14, 15, okay? You could say, I don't want to have as much to gain. In fact, let's go with that one. I actually like how those numbers turned out better. Risking 48 cents to make 52 cents. So risking about a buck, in this case 50 cents to make 50 cents, that puts us in a range of about 100% return that we might be looking for on that trade. Let's go with that one. How many contracts can we do in our account? We can risk 500 bucks. We could do 10 contracts, and there's lots of open interest. You could do that. You don't have to risk, you don't have to do that many, but because we can, we're going to. Okay, we're going to do 10 contracts. First trigger sequential. And what percentage gain would you be happy with? Type it in right now. Okay, what percentage gain? Theoretically, max gain would be at 100% return, risking 50 cents to make 50 cents or 50 bucks to make 50 bucks. But could you be happier with less? I would hope you could be happier with less, okay? Louise, Charles is the very first one in at 60. You would be happy at 60% of our credit here, or not our credit, but 50% gain in that. So let's do it. You are the winner, so we'll go 50 cents. We'll multiply it by 1.6. I'm just taking a shorthand route to get 60% plus on our debit. It says 80 cents. Would be happy campers to get out at 80 cents. All right, you were the first one in. We're going to use your number. I'm curious. We have 65, 60, 70 to 80, 70, 60, 50, 50. Okay, you guys are kind of in the same ballpark as 60, aren't you? Yeah, you definitely are. Create opposite order. We're going to buy it back at, we said 80 cents, right? And be happy about it. 10 contracts. If we made, that would give us a gain of about roughly $30, not including commissions, times 10 contracts, $300. Does that help build that smaller account? Absolutely, that does, doesn't it? All right, good till cancel. We're going to put it in our bucket here, trading a smaller account. All right. I like those percentages that you guys sent in here. I like that. I like that you're developing that mindset. And if this strategy is new to you, I'm going to say you could use any of these example trades that we've used here today. Do them in your paper money account. I think it's helpful if you're following along versus just kind of watching. You know, if you're kicking back, just kind of watching, it makes it a little bit harder for you to really be that engaged to boost your learning. But if you're doing those practice trades, man, that helps a ton. And I'm sure there are several of you that'll say, oh yeah, I paper traded. I paper traded quite a bit before I really felt comfortable doing it in my live account. And that's a great approach. Okay, UUU was trade number 4. 1, 2, 3, 4. It was trade number 5. We got on 5. I have 2 more. We didn't quite get to, but 5, risking $200 in any account was my goal today. Sia says if we get 20% in a couple of days is good as well. You get to decide. Yeah, you get to decide that. All right, my time is up, but you guys have been great. You've had some good questions, some great engagement. Brent's had to help out a little bit there, which I totally appreciate. Thank you so much, Brent. So again, if you see that survey, Brent's just pasted it into the chat again. We always appreciate your feedback. Anything you write, I will read. And anything you want me to pass on to Barb, I will pass on to her, since this is her class that she teaches twice a week. Follow Brent and I on X. And if you're not a subscriber yet, become a subscriber. And I showed you how to find my scan that I do, Early Morning Movers Bullish Scan. Tons of results on there today. It was fun to see. So many results coming back there. All right, you guys, coming up next, we're going to have a little break. Top of the hour, Cameron May is going to be back with advanced charting techniques. All right, so go refresh your beverage and get a snack, and we'll meet you back up here at the top of that hour. Have a great Friday, everybody. Bye-bye.